You may have noticed that the market right now here in Atlanta is kind of strange. We're at a stalemate right now when it comes to home values. And so many buyers, or at least potential buyers out there, are waiting for this market to change before they take that step to buy. I'm going to share with you today why, if you're in that category of buyers waiting, you may be waiting for a while. We're going over the Atlanta real estate market numbers, and we're doing it right now. Let's do it. Hey, if you're new to this channel and you want to know everything there is to know about living, working, breathing, and playing all things Atlanta and the metro Atlanta area, then hit that subscription button, tap that notification bell. My name is Jonathan McCoy, and I'm getting calls, texts, and emails from people just like you looking to purchase a home here in Atlanta, Georgia, and I absolutely love it. So whether you're making that move right now, a month from now, or a year from now, give me a call, shoot me a text, send me an email. I'd love to talk with you more about your needs here in Atlanta, Georgia. We are talking about the real estate numbers, and we're diving pretty deep today, and we're going to do it as quickly as it possibly can. Definitely stay tuned because I'm going to show some quick numbers here for Atlanta. Then I'm going to dive into why I think that these home values are here to stay, at least for the foreseeable future. So let's first talk about just what are the numbers showing here right now. We're taking a look at this first chart here. This is the yearly trend analysis for single family detached homes. And we see active homes are at 6,365 and under contract homes or pending homes are at 5,359. When you compare these to last year, yes, both of these numbers are down. We're down for active number of homes and we're down for pending homes. That means less people are trying to sell and less people are buying right now. In terms of the pending ratio, we're at 45.7%. So a little less than half the number of homes that are on the market are going under contract. And when we looked at closed homes, we're seeing that it's 3,319 homes closed this past month. That is down almost 2,000, about 1,800 homes compared to last year. All right, we're still seeing the stressed homes low at 0.6%. That's good, healthy market here. We're seeing the percentage of failed listings being about 0.25%, meaning about 1/4 of the homes that are going on the market right now are not selling and are going off market. We're looking at the months of inventory being 1.9 months, so still strongly in this seller's market. And we're looking at a median sales price now of $465,000. Compared to last year, it's the exact same, $465,000. So we're seeing this stalemate when it comes to prices. The median sales to list price ratio is 100%, meaning when you're looking at just the general home out there, that the list price and the sales price are the same. Days on market is 13 days. So even though this is 4 days more than last year, we are still selling fast. Particularly one thing that we're seeing right now in this market is if a home is priced right and it's move-in ready, you're going to get multiple offers. You're going to be selling at or a little bit above your list price. However, even when a home's nice and move-in ready, if you're not listing it just right, you are sitting on the market for a while. I have seen this in multiple homes out there. In addition, we're also seeing a decrease in the number of people that want to put money into a home after they purchase, which makes sense right now. Home values are pretty high compared to what they've been over the previous years, and homeowners, with the inflation and the interest rates being high as well, don't have a ton of money to put into their home after they purchase it. So they're not looking to make a large purchase or over what it's really valued at and put money into it. So these fixer-uppers right now are sitting on the market a lot longer, especially if you're trying to push the value of your home. All right, now we're looking at the 6 months trend report. And this is just what's happened over the last 6 months. We've seen that the active number of homes back in January was higher, dipped down in April, and now have come back up in June, which, as you put more homes on the market in the spring and summer markets, that makes sense. But look at the under contract. We actually saw our high point in April, and in June it's gone down some. This is actually pretty fascinating to me, as typically the spring into the summer markets are your high points for real estate. What I'm seeing is less people actually listing and less people buying earlier than we normally see. Real estate is a seasonal market, especially when it comes to families moving. So lots of times they want to do that during the school year. And what we're seeing is that slowdown actually came a little early to us, because the numbers we're seeing in June, so the closings in June, these were homes that went under contract in May. It'll be very interesting to see what's happening in July. I personally think that we're going to see a little bit of drop in the sales price, a drop in the number of solds, and the number of pendings, and the number of actives. I'm going to explain why later in this video, so keep watching and stay tuned. We see the percent failed listings down here jumping up a little bit by 5%. Again, that's homes that are not selling. And we've seen an increase in the median sales price as we've gone out through this year. In January of this year, we saw it at 400,000 for the median sales price, and now we see it at 465. Again, that's not unusual. I've explained on this channel before. When you get into the months where you have more families moving, you actually see more of the larger homes selling, which kind of changes that median sales price some. And lastly, we see days on market going out of 13 days. Now, interesting enough, and I think this is one of the reasons why we're seeing a stalemate here in terms of prices, is again, interest rates really hitting people. But look at days on market. Days on market are actually 13 days for homes that are selling. That's really fast. You would think that competition's high, but you see the sales to list price ratio being 100%. And we see the number of sales going down. So we have this weird dynamic that's happening here of less buyers out here, but they're selling at a quicker rate, but we're also seeing less homes sold. So we have this fight back and forth in terms of what home values are gonna do. I'm gonna explain more of that again later in this video. And last thing to look at here, the inventory and what we're seeing at different price ranges here. And as you can see, it is still a seller's market all the way up to the $300 million range. For those of you looking to purchase a home right now, again, you have less competition, but there's just less homes to purchase right now. For those more luxury buyers out there, up to the $1 million range, the 1.5, the 2 million, you're still seeing it from between like 2.9 to 4.3 months of inventory. Let's explain more about why we see a stagnation in this market, a stalemate kind of when it comes to home values compared to last year. We've seen kind of a little tick up and a little tick down in terms of home values compared to last year as we've gone through this year. In the months of like April and May, we saw that the sales prices were actually a little lower than last year. I think back in March, we saw it a little higher. And then in June, we've now seen it even with what it sold at last year. So why do we see this fluctuation back and forth? The interesting thing that's happened all year long is we've seen less people buying and we've also seen less people selling. So both those numbers went down kind of the same rate almost. So inventory is still low, which is causing prices to hold steady. So while inventory is low, which will help prices try to push up, we've seen interest rates go up. Right now we're hitting at like 7.25%, which is pretty high compared to what we've seen over the past 6-7 years. Those two things are battling against each other. We've seen less buyers, which again, when you have less buyers, typically prices will come down. But we've seen less sellers, which makes prices go up. We saw pretty big jumps in home values when it came to like 2020 and back in 2021. When you have those big jumps, typically following that, you might see a leveling out or a decrease. So that will try to push the prices down. Do you see what I'm getting at here? You have kind of this fight back and forth. It's a pretty even fight with some numbers trying to push the market up and some numbers trying to push the market down, which then brought us to this market where we're just staying steady right now because these are battling it out. Here's what I've seen this year when it comes to home values and when they seem to go up and down a little bit compared to last year. There's two thresholds that I've discovered after really diving into these numbers. The first threshold is this. Most people in Georgia are putting 5% down on a home. So that's kind of the average out there, what they're putting down. When you're looking at the rates, it seems like the 6.5% rate is this threshold. When you go above 6.5%, so when those rates have gone above that this year, we've seen actually prices drop down compared to last year. So anytime that rate went to that level, when I started looking at the numbers, the following months, so that rate hits, someone's trying to purchase a home, they purchase a home or go under contract, and then the next month they're going to close on it because homes close in about 30, 45 days, okay? We're seeing the following month, the numbers for the value of the homes have gone down. When we've been below 6.5% this year, we've actually seen home values tick a little higher compared to last year. When I jumped in a little deeper than that, I was like, okay, if you're putting 5% down on a home and we look at the average values or the median values of homes throughout this year, what are we looking at in terms of monthly payment? Because that's what a lot of people have to take into consideration when you're getting a loan is how much can you afford monthly? And that monthly payment threshold seems to be around $3,500 a month. So for right now, in this current time, okay, with the job market the way it is, with inflation the way it is, with salaries the way they are, it seems like $3,500 a month is the threshold that when we go over $3,500 a month, so either home values have gone up or interest rates have gone up, we see prices start to drop. We see less people coming on the market to purchase homes. So the buyers are kind of leaving. When we see those values come below that $3,500 a month, then we see buyers come back on the market and prices start to tick back up. So two thresholds I discovered. That 6.5% interest rate seems to be important right now with the home values. And more specifically, when I dove deeper, that $3,500 a month. If home values can tick back down or interest rates can tick back down or both, okay, if those come down and we get below that $3,500 a month threshold with that average person putting down 5%, we're going to see more buyers hit the market and this market try to explode. But what always happens is when you have more buyers come on, then you have more competition, which is going to cause home values to rise. So again, we're at this weird threshold. We're seeing this battle back and forth. For some of you out there, you've really talked about how these values can't sustain, that everything's going to crash and all that kind of stuff. And I'm going to show you a number which may change your mind here. So stick with me. Typically, I don't use national numbers. In this case, though, I needed to use national numbers because I don't have the data for just Georgia with what I'm about to share. But stick with me here. Okay, for home values traditionally, year over year, when we look back over the market, we see usually a 4.3% increase or growth in home values year over year. We're going to compare right now. So the 2023 first quarter numbers are in nationally for home values. And what I found is in the first quarter for the US, we're seeing that median sales price is $436,800. 2023 first quarter. What I decided to do is let's look back 10 years, 20 years, 30 years, and 40 years. Let's look at those values. Let's apply that 4.3% growth year over year, and let's see what maybe the home value should be based on the numbers. Now for this one, I'm going to look at the numbers here because there's a lot of numbers here. I definitely don't have them memorized. So let's look at 1983. So 1983, median sales price of the home, $73,300. If we apply that growth over 40 years, okay, from 1983 to now, you're looking at a home values of $394,890. Lower than where we're at right now. 1993, we're looking at home values of $125,000. Apply that growth over 30 years, that 4.3% growth, you should be seeing a price of $442,017. That's actually higher than where we're at right now. 2023, we were at a home values of $186,000. Apply that 20 years later, home value should be at $431,716. Lastly, let's go to 2013, so 10 years ago. Still kind of recovering from that crash in the market, but home values were at $258,400. And if you apply that growth over 10 years, you're looking at $393,673. So some of the numbers show that our home values are too high. Some of the numbers are showing that they're too low. If I average these out, so these four numbers I just got out, we're looking at the home values being around $415,574. Well, we're at $436,800. It's like $19,000 off from where we're at nationally. Does that surprise some of you, only being $19,000 off the growth we've seen over the last 40 years? I know it surprised me some. I thought, kind of like some of you, that home values really have ticked up and that just this low inventory is keeping them high, which there is some truth to that. Now let's compare this to Georgia, because at Georgia, we're sitting at much higher than that. We're sitting at $465,000 for the median sales price. When I compare that to the 415 that we calculated, it seems high, but a few things are gonna come into play here. One thing is this, not all cities and areas are created equally. Here in Georgia, if you go down South Georgia and buy a home in like Macon, it's gonna be a lot cheaper than it is here in Atlanta. A lot of people are moving here, and we know prices in California and New York are much higher than they are here in Atlanta. Where you're living at does play a factor. But there's a second thing I want you to look at. These numbers just showed up recently with Axios and an article they put out, and it was fascinating. These numbers looked at 2020 and 2021 and where money was moving around in the US. And lo and behold, guess what happened? $100 billion, that's right, billion. $100 billion increase or influx of money has come to 6 states in the South. They're Texas, Tennessee, South Carolina, North Carolina, Florida, and Georgia. That's right, there's been a large influx of money that has come here. Between the number of people that are moving here and the large influx of money here, it actually makes sense that our median sales prices have jumped dramatically than what they were a few years ago. When you have low inventory, influx of money coming in, more people coming in, you're gonna have higher home values. So for those of you waiting to say, hey, I'm just waiting for the market to drop, I'm waiting for everything to work out well, you might be waiting for a while. Interest rates don't seem to be dropping anytime soon. As inflation is still being battled, they're just not moving down as much as they thought and we hoped it would. Could be next year they move down some. Even that said, I think there's actually a lot of buyers out there waiting to buy that just are waiting right now. I can't tell you how many homeowners I've talked to right now that right now they're just sitting in their home because they have such a great interest rate. They're sitting at 3% or even at like 2%, 2.1%, 2.4%. I've heard a lot that purchasing a home right now just makes zero sense to them, even though they want to move. They just want more space because maybe they had some kids recently. They want less space because maybe they just, their kids left because they're in college now. They just want a bigger home because they want a bigger home. They're making more money right now. So there are a lot of homeowners right now that want to make that move, but just are having a hard time right now because of the rates and because of the lack of inventory. What does that mean? That means that when these rates come down, we're going to see more buyers hitting the market, which is not going to drive home prices down. They may stay even, more likely it's going to drive them up. So I do not believe that we're moving anywhere when it comes to home values here in Atlanta, Georgia, unless something major happens. Well, I hope all this information was informative to you. I know it was to me as I was looking it up. If you have questions, let me know. Drop your comments below. What do you think about these numbers? What's going to happen in the Atlanta real estate market, the national market? Give us some defense for it. I want your numbers. What are you seeing out there? What's some numbers that can defend your reasoning for a crash in the market or staying even, or maybe it's going to jump up? Would love to hear from you. Drop a comment below. I love responding back to you. And for all those looking to make that purchase here in Atlanta, in the metro Atlanta area, would love to help you make that smooth transition here to Atlanta, Georgia. So give me a call, shoot me a text, send me an email. My contact information is below. Thanks, and I'll see you next time.